Hey everybody, welcome to the channel. Soil here, and today I want to teach you how you can do margin trading on Binance. This is a complete beginner's guide and we're going to discuss every detail related to margin trading on Binance. Without wasting any more time, let's get started. On Binance homepage, here in the menu bar in trade submenu, you can access margin trading, or you can go to Binance Exchange. And here, by clicking cross 3x or isolated 10x, you can access margin trading, which is actually part of the exchange, as you can see. Before explaining the difference between cross and isolated, first let's see what margin trading is and how it generally works. Margin trading is a trading method that allows you to borrow funds from a broker or a third party to have a greater amount of capital to leverage your positions. By doing this, you will have larger profits on successful trades, but you must pay attention that if the trade is not successful and the price is going against you, your loss will also be large, same as your expected profit. Always remember, margin trading is like a double sword and you must be very careful with that, especially in cryptocurrency market, which is inherently very volatile. In other markets, usually brokers provide the funds, but in cryptocurrency market, the funds are usually provided by other traders or investors who earn interest on their capitals. For example, here on Binance, traders and investors who take part in Binance Earn Investment Solutions, their capital is used for funding your margin account here. Actually, you borrow money from those people and pay interest to them. In margin trading account, your initial fund which you transfer to your account is called margin, and by the help of the leverage that the broker provides, you increase your initial fund. In other words, you leverage your capital. The leverage is a ratio of borrowed fund to your margin or initial fund, and in cryptocurrency markets, it's usually shown like 5x, 10x, 50x, and so on, which means you'll have capital 5 times, 10 times, or 50 times greater than your initial fund. For example, right now for BTC USDT, we have leverage of up to 3 for cross margin and leverage of up to 10 for isolated margin. And it may be different for other pairs, but at the meantime, we don't have leverage of greater than 10. These show available leverage for each pair, and these are for isolated margin. They actually show the maximum available leverage for each pair. To make it clear, for example, if you transfer 10,000 USDT as an initial fund into your margin account here, in cross margin, you can have up to 30,000 USDT for trading. In other words, you borrow 20,000 USDT. In isolated margin, you can borrow up to 90,000 USDT and have 100,000 USDT available for trading. Now let's see how we transfer coins here in margin account. But before that, you must know what cross margin and isolated margin are and what's the difference between them, because these are different wallets, and before transferring, you must decide if you want to open your positions in cross margin mode or isolated margin mode. In cross margin mode, you have one margin balance, and the entire that margin balance is shared for all your open positions. So in this mode, one position that is in profit can help another position that is near liquidation. In cross margin mode, you actually average the risk on all positions. However, by doing this, you actually risk your entire margin balance, and pay attention that all of your open positions also act as collateral, and in the case that your margin risk level reaches to liquidation point, all your open positions will be liquidated to cover the debts, interest, and other fees. I'll explain more about the liquidation and risk level later with examples, don't worry about this. And in isolated margin, you assign different margins for different positions, and this helps you to limit the risk of losing the entire margin balance and liquidation of all your open positions. Instead, you only lose the isolated margin for that particular position. Now let's transfer coins to show you the difference in practice. Pay attention that the isolated 10x is already selected. To transfer coins here in isolated margin wallet, here we click on transfer, and the transfer window opens. As you can see, it shows from fiat and spot wallet, and you can also choose futures wallets. I'm going to transfer from my spot wallet, so I select fiat and spot, and here it shows that we are transferring to isolated margin wallet. Here it shows the trading pair that we have already selected. Here in the list, you can choose other trading pairs if you want. We continue with BTC USDT. Because BTC USDT is selected, here we have the two coins, BTC and USDT. I have USDT for transferring, so I select USDT. Here it shows how much USDT I have available to transfer. You can enter your desired amount here, or just by clicking on the max, all the available USDT will be entered here. Pay attention that we are transferring to isolated margin wallets, so this initial fund or margin or collateral that we are transferring is specifically for this trading pair that we have selected here. Let's click on confirm. Transfer successful, and here it is. As you can see, we have something like 83 USDTs for trading BTC USDT pair. If, for example, we select another pair like Ethereum ETH USDT, as you can see, we don't have any available fund for trading. We need to transfer coins for this trading pair so that we will be able to trade. I guess you got the point now. The collateral that we transferred for BTC USDT is specifically allocated for this trading pair. So if we open a position on BTC USDT and the price goes against us significantly, we only lose this isolated margin and the position of this pair will be liquidated, and this doesn't affect our position on ETH USDT, for example. Let's transfer back these USDTs to our spot wallet and see how it looks like in cross margin. We click on transfer. We click on this button to change it from isolated margin to fiat and spot. Here in the top, it gives us a warning that assets with margin risk greater than 2 can be transferred, which I'll explain later what margin risk level is. USDT is already selected, the coin that we want to transfer. We click on max, confirm, and the transfer is successful. And now let's switch to cross margin and see how it is. And now let's transfer coins here in cross margin wallet. As you can see, there is a small difference. We don't choose any specific trading pair here. The coin that I want to transfer here is USDT. Let me search it, USDT, and here it is. Here it shows I have 83 USDT available in my spot wallet. I click on max, all of them entered for the amount. I click on confirm and transfer successful. And here it is, our available USDT for trading in cross margin. Pay attention, this is a cross margin account, and this margin is shared across all the positions that I'm gonna open. I can open a position on BTC USDT, or I can choose another pair, for example, ETH USDT. And as you can see, I have USDT available for trading, and I can open position on any other trading pairs here. If you remember, we couldn't do this with isolated margin, and for each specific trading pair, we had to transfer collateral. Let's go back to BTC USDT and continue this video with cross margin. So we have one margin balance that is going to be entirely shared across all the positions that we want to open. As I said, this is good for averaging risk on all positions and preventing a position from liquidation by the help of profit of another position. But pay attention that your entire margin balance is at risk and all your open positions act as collateral. And in the case that your margin risk level reaches to liquidation point, all your open positions will be liquidated to cover the debts, interest, and other fees. I'll explain margin risk level and liquidation later with examples. Don't worry about this. Now that you understand the concepts of margin and margin trading and the difference between cross margin and isolated margin, let's see how we borrow funds to have greater amount of capital and leverage our positions. We transferred 84 USDT to our cross margin wallet here. This is our margin, and Binance uses this 84 USDTs as collateral. So we use this 80 USDTs as collateral to borrow funds. This is a cross margin wallet, and we can leverage our position up to 3 times. So for example, if you select the borrow option here, you see that our capital is tripled, and now we have 252 USDTs available for trading. In other words, we borrowed something like 168 USDTs. We use our 84 USDTs as collateral to borrow 168 USDTs. We have 2 ways to borrow funds for trading. One way is when you're placing an order, select borrow, and Binance will automatically borrow funds for you if the size of order is greater than your initial fund. And the other way is here by the help of this button. We borrow and then we start trading. First, let me explain borrowing before trade, and then I'll explain borrowing at the same time when you're placing an order by the help of this option you see here. Let's click on borrow. And here we go. Because we are in cross margin mode, the margin is shared across all trading pairs. So we can borrow any coin we want and then trade on that coin. Because we've already selected BTC USDT, let's work with these two coins and see how it goes. For example, first let's borrow USDT because we have USDT in our margin account and we want to see what happens when we borrow. Here we search USDT and here it is. Pay attention to this part. Here it shows that we haven't borrowed any USDT yet. And here it shows the maximum amount that we can borrow is 168 USDT. So we can use our initial fund, the 84 USDTs, as collateral to borrow 168 USDTs. And here it shows hourly interest rate, which is 0.0058, as you can see. On Binance, the interest rate is applied every 1 hour, and as soon as this 168 USDTs are borrowed, this hourly interest rate will be added to our debt, and this happens every 1 hour. You can click on this link to get more information about interest rates and the maximum amount that can be borrowed on Binance for every coin. Here you enter the amount you want to borrow from your available amount, or here you can use these percentages. Let's select 100%. We click on confirm borrow and request approved. And now, as you can see, we have 252 USDTs available for trading. We had USDT in our margin account and we borrowed more USDT to buy Bitcoin. Why? Because we believe that the Bitcoin price is gonna rise, and then at higher prices we will sell, and after that we repay our debt, which is 168 USDT plus the interest. And by doing this we make larger profits. Let's go to market order and pay attention. It doesn't matter if normal or borrow is selected because we've already borrowed the maximum available amount. We keep normal selected and let's buy with half of our available USDT. And after this trade with another half, for example, we want to buy Ethereum because we think that Ethereum also is going to rise, but maybe at higher speed. So we want to take advantage of that move. If that's the case, we click on buy BTC, order placed successfully, and now we have 126 USDT available for trading. We want to buy Ethereum now because this is cross margin. We can do this. Let's select Ethereum, ETH USDT. Here it is. Please pay attention in this case that we have an open position. If that open position is in profit, it increases our margin balance and we may be able to borrow more by selecting borrow while placing our orders. I'll explain this kind of borrowing later, so don't worry about this. Let's select normal. And we want to buy with 100% of our available USDT. You can also see the total amount here by clicking on this. It's 126, 100% of our available USDT. We click on buy ETH and order created successfully. And as you can see here, we don't have any USDT available for trading. It's just a very small amount, less than $1. Here in the bottom, we have balance, debt, and equity, which I explain them now. This is our total balance, which is 0.0044 in terms of BTC. This is total debt, and it's 0.0029, which is the amount we borrowed plus the interest. And here, this is account equity, which is total balance minus total debt. This is actually what we get if we repay our debts right now. And this is margin risk level, which gives us the risk level based on the fund we borrowed and we need to repay, the total debt, and our collateral, which is actually the account equity. The formula for margin level is total asset value to total borrowed value plus total accrued interest. actually total balance to total debt. When the margin level reaches to 1.3, we will receive margin call, which actually Binance gives us a warning that we need to deposit more funds and increase our collateral, or we must reduce our loan by repaying the debts. If we don't take any action and the margin level reaches to 1.1, our possessions will be liquidated automatically for repaying total debts, which are the funds we borrowed plus the interest. So you must always monitor your margin risk level. Your funds and possessions are shown here in these two tabs, but a better way to look at them is here by going to wallet and clicking on margin. Here we have total balance, total debt, account equity, margin risk level, and profit and loss for today or other time periods that you want. Here in the funds tab, we have total balance and available balance for the coins. These two are what we just bought. And here in USDT, you see this is the amount that we borrowed and this is the interest that we must pay. Every 1 hour, it will be added to this amount. Here in the positions tab, it shows the positions that we have: BTC, ETH, and negative USDT, which means we must repay this amount of USDT. Here you can change to USDT benchmark, and here we have the index prices for our positions, liquidation price, and the percentage to reach to the liquidation price. Let's get back to the exchange. Alright, now consider that the price advanced and reached to the point that we expected, and we want to sell our coins and repay our debts. First, let's select BTC, USDT, here it is. We go to Sell tab and we want to sell our BTC by the help of market order. Pay attention that one way is to select repay options here. So after selling the BTC, the resulted USDT will be used automatically to repay the debt if it's enough. Or the other way is just selling the coins normally and then repaying the debts by the help of this button here. Let's do it this way because in this example, we also borrowed here before the trade. And later I'll explain borrowing and repaying by the help of these options in another example. Alright, let's sell our Bitcoin in normal way. We want to sell 100% of our available BTC. We click on sell BTC and order filled. And our Bitcoin is sold. And now let's select ETH USDT. Here it is. Sell tab, market order, normal, and we want to sell 100% of our available Ethereum. We click on sell ETH, order filled successfully, and it's sold. And now if you go to buy tab, you see that we have USDT available for trading because we sold our BTC and ETH. But this also includes borrowed money, and every hour interest is added to our total debt. So we must repay our debt if we don't want to enter another trade. We click on repay. ETH is already selected and it says you haven't borrowed ETH yet. We borrowed USDT, so here we search USDT, clicking on this. And here, as you can see, it shows we borrowed 168 USDT and the interest is 0.0098. And the sum of these two equals 168.055, which we must pay. We click on 100% because we want to repay our total debt. We click on confirm repayment and it's approved successfully. And if, for example, again, you go to repay and select USDT, you see that we don't have any debt. Actually, we haven't borrowed any USDT yet. In margin trading, besides buying coins and selling them at higher prices and making profit, just like the example we just had, we can also sell coins and buy it back in lower prices and make profit. Let's select Bitcoin, BTC, USDT, here it is. And consider, for example, we have analyzed the market and we think that the Bitcoin price is gonna fall. Right now we have USDT and we don't have any Bitcoin to sell. So we can borrow Bitcoin and sell it, and later when the price declines and goes lower, we buy Bitcoin and we repay our debt. So we click on borrow. The BTC is already selected, actually the coin that we want to borrow and sell it. Here it just shows a very small amount of BTC from previous trade that couldn't be part of the repaying transaction, and here how much BTC we can borrow. We click on 100% to borrow the maximum available amount. Confirm borrow, and the request approved. By the help of our initial fund as collateral, we could borrow 0.0029 Bitcoin. Now we sell this BTC because we believe that the price is gonna fall and we want to buy it back later at lower prices to make profit. We go to market tab, which is already selected. We set the amount to 100% and we click on sell BTC, and the order is filled successfully. And as you see, we sold our Bitcoin. If we go to buy tab, we see that we have our collateral tripled because we borrowed BTC and we sold it. And later when the price falls, with 2/3 of this available amount, we're gonna buy BTC to repay our debt. Now consider that the price declined and reached to our expected point, so we must buy BTC to repay our debt. If BTC is the only coin that you borrowed, here it shows the total debt, which is in terms of BTC, and this is the amount that we must buy to repay our debt. In the case that you have also other debts or you are trading in other coins, to know how much you must buy for repaying, you can click on repay here to see how much is your debt, your total debt in BTC or any other coins that you borrowed and now you want to repay. So we must buy 0.0029 BTC to repay our debt. I just copy it and paste it here. This is limit order. We want to place a market order, so I switch to market, and for the size I paste it again here. And if I click on the amount, this is the amount of BTC that we are buying to repay our debt. We click on buy BTC and the order is filled successfully. And now we can repay our debt. We click on repay. This is our available BTC. I select 100% because I want to repay all the debt, and I click on confirm repayment and request approved. And now here you see that we have a very small amount of debt, less than $1, which doesn't put our account in danger. Now let's see how we borrow and repay by the help of these options when we are placing an order. If you select normal and place an order, everything is exactly similar to trading on the exchange. No funds will be borrowed. And if you select borrow, you can see that our initial fund increases. It's actually tripled because we are in cross margin mode. When we select borrow and place an order, the system automatically borrows the required amount for us. Let me show this with an example. Consider we believe that the Bitcoin price is gonna rise. So we want to buy 0.002 Bitcoin, which costs 114 USDT, which is greater than our initial fund. We click on margin buy BTC and it wants us to confirm the order. It says that this order is going to use our initial fund 84 USDT and it will borrow 30 USDT on our behalf for buying 0.002 BTC, which totally it costs 114 USDT. It also reminds us that this loan has interest. We click on confirm and the order placed successfully. Now consider that the price advanced to our expected target and we want to sell our Bitcoin and repay our debt. One way is just like the previous example, selling our Bitcoin in normal way and then repaying our debt by the help of repay button here. But easier way is using repay option to automatically repay our debt. When we sell our BTC and receive USDT, the USDT is used to repay our debt on USDT, the USDT that we borrowed. So let's go to market order, which is already selected. We go to sell tab, selecting repay. We want to sell 100% of our available Bitcoin because repay option is selected. So after the order is executed, our total debt will be repaid automatically. We click on sell BTC. It wants us to confirm that the USDT we get will be used to repay the USDT debt in our margin account, and the interest will be paid first. We confirm and the order is created successfully. We sold our Bitcoin and at the same time our debt also repaid. To make sure, if we click on repay and select USDT, you see that our debt is repaid. Let me close this and let's see another example of taking a short position by the help of a borrow option. Consider that we think that the BTC price is gonna fall, so we want to sell BTC and buy it back at lower prices and make profit. We don't have any BTC and we're going to borrow BTC and sell it. We select borrow and it shows how much we can borrow. Let's borrow, for example, 0.002. We click on margin sell BTC. We didn't have any BTC in our margin account, so it says that the order is using our 0 BTC and it's borrowing 0.002 BTC to sell 0.002 BTC. We click on confirm and the order is filled successfully. So we borrowed 0.002 BTC and we sold it. If we click on repay, we can see that it shows we borrowed 0.002 BTC, so we need to buy 0.002 BTC plus the interest to repay this debt. Now consider that Bitcoin price declined and we want to buy BTC and repay our debt. So we go to buy tab, market order is selected, we select repay, and for the amount to buy, I click on repay again. I just copy this amount and paste it here. As in terms of USDT, I change it to amount and again paste it. Yes, it's correct now. I click on buy BTC. It says that the BTC we get will be used to repay our BTC debt. We click on confirm and the order placed successfully. At the same time, we did both of buying BTC and repaying our debt. And by clicking on the repay, you see that we repaid our 0.002 BTC debt. Just a very small amount remained. Let me close this. And another point that I must mention here is that if we place an open order like limit order, when we cancel the order, the borrowed money is automatically repaid. Let me show you this with an example. Let's go to buy tab and limit order. I select borrow here. And let's place a limit order at 50,000, for example, with the size 0.002. We click on margin buy BTC. It wants us to confirm. We click on confirm, and here it is in open orders. We borrowed USDT for placing this limit order on Bitcoin. If we click on repay and select USDT, you can see that we have debt on USDT. It's something like 16 USDT. And if we cancel this order, the principal, the amount that we borrowed, is automatically repaid. Here you see that we have our full leveraged fund back in our account. And if we click on repay and searching USDT, you see that our debt is repaid automatically and just a very small amount remained as borrowed, which is actually the amount of interest which is not paid yet. We click on 100% to repay all the remaining debt and we confirm the payment and request approved. Margin trading may seem attractive because of the potential of gaining larger profits on successful trades, but you must pay attention that if the price goes against your expected direction, your loss will also be large, same as your expected profit. So you must be very careful with this trading method, especially in cryptocurrency market, which is inherently very volatile. Alright, that's it. Thank you for watching this video. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next episode and good luck with your trading.